in the last week or so, you've had both Jim Chalmers and Anthony Albanese saying since it's been gone through the upper and the lower house.
Yeah, well, they tried pushing it through too.
Which they did the deal with the Greens and got it through. They're saying it'll all quieten down. To me, the fight on this has just begun. And the reason I say that is because you've got incredibly smart people that understand, they're seeing it, firsthand, what it could, the impact it could have on their business. But as people understand the consequences, the unintended consequences, I mean, they're significant. And let me just give you one unintended consequence. Currently we've got about 7.7 million Australians own shares outside their super. And how this new tax works is if you have a portfolio of shares, say you have 5 or 6, say you have 10 individual shares, and what you tend to do with your portfolio, you'll get 3 or 4 do really well.
Yep.
And the rest of them, hey, probably a couple do really badly, and the rest of them are pretty average.
Yep.
Now, if you don't make, you can't adjust your real losses against your real profits. So as an individual investor, you're actually better off either investing in forget trusts, but in a company structure, so you can offset your real gains against your real losses. But if you do it in your own name, you can't do that. So you could be, if you had the banks, I think over the last 10 years, and CommBank's been the standout performer, and the other rest have done probably a little bit around inflation or a little bit less than inflation.
Yes.
Then you'd be paying something like a 100% tax rate on your gain. So effectively, it is a disadvantage now to hold a portfolio of shares. I mean, it's just, it's mind-boggling, isn't it?
So you're already saying I'm 4 years behind before I can buy my house in this generation compared to our generation.
Yes, and don't buy a portfolio of shares.
Well, okay. Well,
you either buy an ETF or we manage.
I was going to say, how do I get ahead?
Yeah, well, it's really difficult. It's you don't get ahead. You don't get ahead at the pace that we got ahead at. Or you buy a listed investment company. That's what we're married. Or you put it into a pooled fund, and you probably only want one, because if you have a number of them, then if some of them just perform, they go up, but they don't go up in real terms, so you actually have a real loss. You can't offset it against your real gains, so you're paying a disproportionately high tax. So in theory, all the money goes to a few groups.
Yeah.
Now, what is that? Is that socialism? Is that communism? Is that Marxism?
Yeah, it's all of the above, I think.
I'm not sure. So effectively, those. Currently we've got about 38% of Australians own shares.
38%.
Yeah. In America, and we were back in '99, I think, when Johnny Howard said, we're going to democratise share ownership.
Yep.
I think we got to 41%.
Okay.
But over the last X amount of years, the government hasn't been encouraging people to invest. They've been doing things that are actually not good for listed companies. They changed franking a few years ago.
Yeah, which you fought pretty long and hard about.
Well, that was back in 1819. They did another little twist, which is negative for listed companies.
Yep.
So effectively we've gone, say, from 41% to 38%.
Yep.
In America, over those same 20 years, America's gone from 52% share ownership of individuals to 62%. Because they believe in the capitalist system. Yep. They believe in long-term capital, patient. In the UK, they've gone from 30% to 18%, and that's where we're heading.